Hi, this is Jack from Alpha Charts with a stocks to watch video. Today is February 20th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. So let me get this down. Starting with a weekly chart of the Qs. Just to show the Fibonacci's right here. So from the COVID lows to the relief high, we have a retracement. The 0.618 retracement comes in at 287.67. All right. So I want to kind of make a case for where the market may be going before we get started. It's kind of what I do in my state of the market address, but this is I think this is important today. So let us look over here now and go to a daily time frame. And you see we have A, B, and I think there's a good possibility that there's a C wave coming. I think that's how they say that, C wave. One more leg down, basically, in the Qs. So, I mean, could we bounce here? Absolutely. That's a possibility. I'm just giving you one possible scenario. A C wave down or last leg down, whatever you want to call it, is roughly, 13% from here, a little overshoot, 16%. Okay. So it's a pretty good leg down, and that would give a complete or total correction top to bottom would be 27 to 30%, 29, 30%. And that's a pretty it's pretty steep decline. But so let's keep that in mind, that there could be another leg down, and it could be anywhere from 12, 13% to about 16%. Okay. And let's keep in mind that there are Fibonacci retracements, and also, if you want to call it the Elliott wave or whatever you want to call it, ABC type pattern that could be in play. So now let's go to the IWM. Okay. By the way, 300-ish, if it's overshoot 287-ish is the areas I'd be watching. IWM. So IWM has this, the long consolidation pattern, and now has this kind of ABC. If you want to do 1, 2, 3, 4, maybe 5, whatever. Now this is major support here, right? So if this has one more leg down into the major support area, we're looking at 16, 17%, same as Qs, or very similar to the Qs. So just keep that in mind. We're both about 16, 17% away from a major support area. If we do get that next leg lower, and this turns out to be a bear flag, which it is starting to turn out to be a bear flag, right? On Friday, we had that breakdown. If we see continued weakness Monday, I think that's very much a possibility. So let's talk about let's talk about interest rates real fast. I'm going to jump to interest rates. The 10-year, we got that 2% that I've talked about. Well, it is potentially one more leg higher, could precipitate that next leg lower, right? So if this goes up to that, 2.8, 3%, 2.75, whatever, one more sharp move higher, that could be a significant situation. Again, going to a weekly chart, why this is important. This was a downtrend line from 1981, and it hasn't violated this downtrend line ever. So yeah, so there's a downtrend line. So let's see if it gets turned back around this 2.8-ish or so, 2.75, somewhere around here. And that could, but a sharp rise into it could precipitate that next leg lower. It's just a possibility, just something to think about. So it's about the next leg lower. What is it going to look like? Well, right now, 35.54% of stocks are above their 50-day moving average. I would say that next leg lower, let's go over here, is probably going to push this into the green area, right? That's under 10% above their 50-day moving average. And that would cause extreme washout in breadth, an extreme bearishness. And that would be maybe a signal, a contrarian signal, that it's time to get long, something to look for. All right. I'm also looking for put call ratio, equity only put call ratio, right? Let's just go ahead and do this and spread this out just a little bit. So as you can see, we only hit extreme bearishness every so often. So yes, we're bearish, but not extreme bearishness. I think a put call ratio above 1.4, an equity only side, I think that is extreme pessimism in the market. Again, potentially a reason to potentially call bottom, or at least start to nibble and be a little bit more optimistic. All right. And if all of this can happen over the next month or so, and as the Fed gets ready to raise rates, and they only raise rates by 0.25%, I think this could be one of those sell the rumor, buy the news type events, meaning there's a relief from the market that's only 0.25, and we may get a rally. Now, is it going to be a relief rally? Is it going to be a new uptrend? I don't know, but that's my best scenario I have going forward on what may happen. Again, market doesn't care what I think may happen, but looking at the way things are lining up, those are the signs I'm looking for. And if everyone doesn't hit, that's probably going to be okay too. I don't have to look for confirmation check marks on every single one of them. But those are signs I'm looking for extreme bearishness in the market, which I don't think we have yet. We have bearishness, but not extreme bearishness. Once we get to extreme bearishness, that's when it's time to really flip and potentially go long, or at least nibble and try to say that maybe a bottom is being formed, or whatever. All right, so I wanted to give you the scenario. Now let's go into the stocks to watch. I thought that was important. By the way, I do this every Saturday on my stocks to watch video. This is a condensed format of it, but I thought it was important, so I wanted to share it again. All right, so I have 2, 4, 6, 7, 8, 9, 10, 11, 12, 13. I have 15 names for you. There's not much going on out there. So I just wanted to, give you some names. The miners are working still. Here's Newmont. Again, be careful your earnings dates. They are coming, but Newmont's working nicely, and there's some strength in gold. So let's look at gold too right now. Again, on the weekly chart, just a gigantic pattern, which we've talked about. So going on gold's a possibility too. I love that, the breakout. I mean, that's just beautiful right there. Yeah, so with gold working, now look at the miners. GFI is another one. Again, way extended. Absolutely. Earnings looks like they're out of the way. Yes, but looks good. Maybe it needs to come back just a little bit, retest this area. But GFI looks good. EGO, Eldorado Gold. Again, earnings coming up very soon. Getting a little bit extended. SSRM. This is the downtrend line. I would like to see it break. That would be really strong. Earnings very soon. New core, not quite a minor. And I don't know if they do gold or not. They may do steel. I don't know, but it looks great, right? Looks great. This is potentially play the breakout. Breakouts are tough right now. That a beautiful run. Now it's just consolidating. So it looks really good. CMC, just trying to break out, couldn't, but made a higher low, which is nice to see. Let's see if it tries again. Great accumulation. Alcoa. Let's go weekly on this one. Maybe not. Yeah. So Alcoa, let's just go weekly. Make my life easier. Yeah, so it broke out of this area right here. Now it's coming into this overhead supply again, very extended. I'd probably wait on this one, but it is acting really well with great volume coming in, accumulation. So love that. Few oil and gas things holding up. They really took a beating this past week, oil and gas. But AR is in the area. I would definitely want to see confirmation on this, but nice accumulation. So it looks pretty good. And PXD, again, trying to break out. I was hoping it was going to pull back a little bit. It really didn't, just went sideways, and now it's moving higher. Again, big area that's breaking out from. So it is a place to manage risk against, okay? You have some staples like Kroger, right? Kroger, so it broke out of this cup and handle, it then retraced all the way back into the handle, and then moved higher. So maybe this 44.20, its earnings is coming up, it's past its dividend. So yeah, I mean, everything's kind of bunched up together. So that looks not bad. Let's see what Sprouts is doing. This wasn't on my list. Sprouts is holding up two earnings coming up. I think Kroger had earnings coming up in March. What else we got here? We have Philip Morris, another staple just taken off. Looking good again, way extended. So just be careful with that one. You have HUN, a chemicals company, Huntsman. Again, beautiful, and now just going sideways. Looks really good with this volume, not bad. And my last one in this group is HSIC, Henry Schein, medical distributor. Again, great volume, breaking out and kind of just now consolidating sideways, extended. So just be careful with that. Okay. So those are the names I had. There's about 15 of them, I think I said. That's my scenario for what I'm looking for in the markets going forward to get more of a broad-based good uptrend, which we don't have right now. So play these names with caution. Market's tough right now. It can go against you in an instant, especially if there's another leg down. I think cash is king. I think that there's significant chop. Any rallies along the way, and there will be rallies on the way, are suspect for now, and are there just to chop you up and take your money. So just again, be careful, stay safe out there, and hopefully next week we see more. I hope for more deterioration, actually, so we can kind of get to that bottom, right? We got to get to that bottom. So we'll see. Anyway, good luck in the market this week. Take care. Markets are closed on Monday. Bye.